Figma just went public in a record-breaking IPO, with shares surging 250% on their first day of trading. But is this design software stock worth the hype? If you follow tech or you're an investor and don't understand the magnitude of this IPO, you're already behind professionally and financially. This video will give you a sharp, no-fluff breakdown of Figma, so you can decide whether to ignore the noise or build conviction of what could be a generational company. To understand Figma, we first have to understand why this IPO was so important to the markets. Tech IPOs have been dead in the water in recent years. Many were indefinitely delayed, went public at lower valuations than VCs invested at, or just straight duds. Let's rewind. After the 2021 IPO frenzy, the doors slammed shut. Interest rates spiked, regulation made acquisitions impossible, and it left venture capital with massive illiquid investments with no exit routes in sight. Even Reddit barely snuck out the door last year with a $6.4 billion valuation. When Adobe proposed to buy Figma in 2022 for $20 billion, it was a spark of hope in a frozen market. But the deal collapsed under European antitrust scrutiny in 2023. With the acquisition blocked and IPO markets looking ice cold, tech looked stuck. But that changed fast. Notable IPOs this year like CoreWeave and Circle produced multi-100% returns in their first few months on the market. That's why Figma's IPO last week wasn't just a liquidity event. It's a signal that public markets are ready to fuel high-growth tech businesses again, providing optimism for early-stage VCs, late-stage tech companies, and retail traders. So how did Figma go from a dorm room startup to a public company worth tens of billions of dollars? The answer is critical to understanding what makes this company and its CEO so special. The story starts with Dylan Field, who still leads Figma as CEO, and Evan Wallace. They met at Brown University and spent 5 years building the original product before launch. Figma was a brilliant piece of software, but it's how they took it to market that was so disruptive. Sketch owned the designer market, so Field and Wallace made a counterintuitive bet. They designed for multiplayer from day one. Instead of building the best individual design tool, they built the best collaborative design tool that could be used via browser. That meant product managers could jump into design files, engineers could inspect assets directly, and executives could leave feedback without asking designers to export PDFs. The genius of Figma was making design a team sport, not a solo craft. This in turn broke the traditional software sales model. Instead of selling to IT departments who'd force tools on reluctant users, Figma grew virally within teams. Designers would invite colleagues would start new projects. Before enterprise buyers knew what hit them, half their company was already using Figma. And that's how Figma is now relied on by 95% of the Fortune 500. It counts 13 million monthly active users and 450,000 paying customers. And here's the kicker, PMs and engineers now represent 67% of Figma's revenue, not designers. So after all that, is CEO Dylan Field, who's now a multi-billionaire, ready to just retire? Not quite, because his board is giving him every reason to keep shipping software like he was in a dorm room. Dylan's been set up with a potential $4 billion pay package if he can run Figma as a public company as well as he did a private one. He also has dictator-level control with 74% of voting rights. This means Figma's future lies with the visionary who wrote the first few lines of code, and its financials say a lot about the future too. Figma's numbers are nothing short of staggering, even by the standards of the most elite software businesses. It hit $749 million in revenue last year and looks to be on track to clear $1 billion this year. In Q1, they hit $228 million, up a whopping 46% year over year. That's rare air for a company that's this late stage. Gross margins, they're a juicy 91%. Net income in Q1 came out to $44.9 million, the company's first profitable quarter. And I'll add, they've got $1.5 billion in cash in the bank thanks to Adobe's breakup fee. This is the SaaS profile that investors salivate about, which is why this stock is so expensive. After bumping their IPO range from $25 to $33, Figma hit markets at what was already conceived to be a rich valuation at $19.3 billion. But within an hour of trading, the company was valued at $60 billion. With that market cap, Figma's forward revenue multiple is 60x. That's 6 times more than other public SaaS companies like Adobe or Salesforce. So what could possibly justify this? Well, Figma is growing faster than any of its peers, reportedly even including private ones like Notion or Canva. And from a product standpoint, it sits in a category of one. B2B collaborative design infrastructure that spans from brainstorming to production code. Figma's financials might be able to hold up a sky-high valuation if breakneck growth and execution continues. But price isn't the only concern investors have around this name. Figma mentioned something wild in their S1, something we've probably never seen before with a company that's about to go public. They stated that AI could one day destroy their business model. And with the pace of AI lately, it's not hard to believe that it could one day replace the role of designers, engineers, and PMs, or at least make it so there's far fewer of them. However, as much of a risk as AI might pose to Figma's business, it's also the reason why this company might become a generational bet. Now for our final question, where is Figma going? Well, they've made it clear they are not a design tool anymore. They want to be the command center for how modern teams ship product. A market opportunity Dylan Field estimates is $33 billion. And it comes down to integrating AI in a way that no other company is. Figma's recent moves into AI-created presentations, website, and code generation signal a bigger play, owning the entire workflow from idea to shipped product. The real shift happened at Config 2025. Figma dropped sites, letting you turn mocks into real websites with zero code. They leveled up their dev mode with Code Connect, syncing designs directly with GitHub to output fully functional products. And they made FigJam way more than a whiteboard. It's where PMs, marketers, and engineers map ideas and execute live. The result? A single canvas where teams can go from idea to output. No tool switching, no handoffs, and the AI layer is the kicker. Figma Make turns prompts into working products. Agentic tools help critique, iterate, and refine inside the file. What I want to stress is this approach isn't what most companies do, which is just bolt AI onto their products and expect people to find value in it. Figma envisions a future where AI is part of every workflow, but human craft still drives the show. While other AI platforms like Gemini, ChatGPT, or Midjourney can generate designs or code in isolation, they lack the integrated workflow and collaborative context. The generational bet is not that Figma becomes Adobe. It's that Figma becomes the canvas for how humans and AI collaborate and combine their intelligence. Figma is a software bet as much as it is a gamble on the future of AI and how it manifests in the workforce. Thank you so much for watching, guys. And if you like this kind of content, I made this video about how AMD could become $1 trillion company by better competing with NVIDIA.